So welcome to Gallo LLP Coffee Chats. Looking forward to having a discussion over the programs and grants that have come out here in Alberta and across the country. We've gotten some questions about some of the newer ones, and we're hoping to answer those questions today by giving a quick brief and then opening up for questions. If you'll notice, you're on mute. Once the main presentation is complete, I'll take everyone off mute. And of course, if you have any questions, please type them in the chat box. So there's essentially 3 programs that we wanted to talk about today that are relatively new and require some unique qualifications and some deadlines. And then we're going to go quickly into personal taxes. So the 3 programs that we'll be talking about is the Alberta Critical Worker Program that was just recently launched, the Highly Affected Sectors Credit Availability Program led by BDC, and then a new small one called the Canada United Small Business Relief Grant, which is a grant as opposed to a loan. So let's go on to the first one, which has probably had a lot of controversy here in Alberta, certainly, and that's the Alberta Critical Worker Benefit. So a little bit of history on this, of course, is the Alberta Critical Worker Benefit. The funding for this actually came from the federal government a while back. Most of the provinces, Alberta included, didn't exactly know how to employ these funds, so they held on to the money through political pressure. Now they're releasing it. So, and I say that because if you go into the websites and if you go into the local media, there's a lot of confusion around this because it is a confusing program. Basically, the gist of it is if you qualify, you can get $1,200 plus about 7% to cover the employer portion of CPP and EI for every employee that qualifies under the program. So big picture, the program is broken down into two programs. One is healthcare workers. So as the name of the program implies, the Alberta Critical Worker Benefit Program, it is related to critical workers that worked throughout COVID-19. So one section branches off into healthcare workers, and then which is public sector, including not-for-profits, and then the other one is private sector, and then it gives a list of qualifying private sector critical health workers. So if you qualify, it allows you to apply the corporation, and we'll focus mostly on the private sector stuff. We have a couple of not-for-profits that have asked questions on it. It's still being sorted out. The gist is they'll be able to apply. There's some leadway or question on whether the money will come directly from the government or they have to apply like private sector. So we'll focus on the private sector. If you're not for profit, we can definitely have a private chat after this. But if you're in the private sector and you're one of the qualifying entities, and there's a list of qualifying entities, and we have, you can go to the website, Alberta Critical Worker Benefit. But the gist is this: is if you're a private sector entity and you fall inside retail, food, truck transport, warehousing, private health clinics, so that's dentists, chiropractors, stuff like that. You work with First Nations, you may qualify, but we've had some negative results with some of our private sector qualifications. And if you do qualify, you can apply through the private sector portal, which the corporation has to do, not the individual, but the corporation has to do. And then you submit the information, and then you'll get a check for $1,200 plus about 7%. And then that you'll write, then of course, then you'll fund your staff employee the $1,200. Of course, normal remittances have to come off of that. Some of the problems we've seen with the program right now, for example, if you go into the retail, specifically in retail, actually, let's go to, we've had a couple in food manufacturing as well. So if you're a food manufacturer, you'll qualify for this. And specifically process controls and machine operators, food, beverage, and associated product processing. So that doesn't mean the whole company qualifies. We've had some small food processors, and now you could think of juicers, bakers, stuff like that we believe should qualify, but on initial application, they were denied. So you have to be prepared to kind of go through the process, and hopefully you can get it. So I'd recommend you go on the website. There's a list of qualifications The amount is $1,200 plus 7%. You need to apply before, so the period is between 12 October and 31 January. You have to have at least 300 hours working, and then you'll qualify for it. So A, did they work for you during that time, 1 October, 31 Jan? Did they have 300 hours? And did they make less than $25 per hour? Which is a really interesting criteria, because on the public sector, so the nurses and all those people that will begin this, they definitely make more than 25 bucks an hour, and that criteria is not there. But for some reason, on the private sector, it is there. Will that change? We've had some questions around that. I don't know. It certainly has been brought up. Certainly a nurse, and this we're just talking here. A nurse making $100,000 a year, getting an extra 1,200 bucks versus someone making $26 an hour, say a dental hygienist. We've had these cases. Most dental hygienists are making slightly over $25 an hour. They won't qualify, but someone making double their wages in the hospital does qualify. So that's a little frustrating for private sector for sure, but it is one of the criteria at this point. And of course, you have to apply before March 15th. So it does come up quite soon. The criteria in terms of March 19th is when not 15th, but March 19th. So deadline's coming up in 25 days or so. 300 hours, 1,200 bucks per employee plus 7%. That funds will then go to the employee, and the employer has to apply. So that's the Alberta Critical Workers benefit. A lot of stress on that, certainly because of the criteria on the private sector. And we encourage you to apply. We can help you apply. And if you get a negative result, we've actually applied again and grieve those. So we'll see how that goes. The next major program that has come out recently is the Highly Affected Sector Credit Application Program, the HASCAP as we call it. HASCAP is led by BDC through a local bank. So very similar to the kind of the CEBA and the rent subsidy programs, where your local bank, certainly not the wage subsidy, but certainly the rent and the CEBA, where you applied to a national entity, but it came from your local banks. So the Highly Affected Sector Credit Application Program, I'll just call it HASCAP from now on. HASCAP requires a few things. One is that you had applied for the wage subsidy or the rent subsidy throughout the period, and the period being since COVID-19 started, so 14 March 2020. If you've applied for any one of those, you qualify. That's the initial qualification criteria. Then there's a few other qualification criteria, like, for example, it's going to be used to reopen or continue to operate. It's not going to be used to refinance other debt. The grants go from $25,000 to $1 million. Multiple companies can get it, and there's a cap on that of about $6.25 million. So if you have multiple corporations in your corporate structure, you can certainly apply for multiple HASCAPs throughout. You apply through your financial institution. There's a list of financial institutions, but it's safe to say that all the national banks and most regional banks are on that, including credit unions. So you shouldn't have a problem with that. Of course, you have to pay it back over. The benefit of HASCAP is it's a 10-year term at 4%. So probably a little higher than your current line of credit, but we think over a 10-year period, it's going to be probably lower than most interest rates, as inflation picks up in the next, say, 24 to 36 months. So a good program, I highly recommend you apply for it if you've been affected. Of course, the criteria is 50%. I should have mentioned that. So it's the wage subsidy or rent at 50%. If you were at the 25 or 30% and you qualified for some of the wage subsidy programs, but not a 50% decrease in revenue, you're not going to qualify for HASCAP. Initially, people thought you had to have been shut down by government, but that's not necessarily the case. You could have remained open, but you're highly affected just because of the general operation. So it's a good program. It's going to be open for a while, still 30 June. So you have some time to apply for it. And of course, you can apply for multiple entities. So I'd recommend getting on that as soon as possible. The last program I want to touch on is a grant. And I think it really highlights is that there are a lot of grants out there that aren't highly publicized. And, you know, I won't say it behooves you, but certainly if you do some research, there's grants, you know, from in your sector, from potentially like your advocacy groups. There's regional grants, there's city municipality grants. So there's a lot of grants out there. And this last one I want to talk about, and it was on the invite. It's called the Canada United Small Business Recovery Grant. It's a $5,000 grant. It's actually led by RBC. The federal government matched it. You don't have to be an RBC client, but RBC is running it. RBC has put some money in. Obviously, I think their idea is that they'll get your business at some point, but the federal government's thrown money into it. They had it closed. It's reopened again because they used their first initial tranche of money. They have more money. It's open right up until mid-March, March 15th to apply for. So you could go on the Canada United Small Business Recovery Grant, apply for it, and see if you get it. We don't actually have any clients that have currently applied and got it yet, but I'm recommending everyone does apply for it. It's $5,000 and it helps you get going. So those are 3 grants that I really want to talk about. Before we go into personal taxes, I'm going to open it up for any questions, and I'll allow you to unmute yourselves. And if you have any questions, please ask them. I notice there's nothing in the chat box. Okay, we'll carry on with personal tax season. Obviously, we're heading quickly into personal tax season with T4s and T5s being required to be filed by Monday, March 1st, because month end is on the weekend. Once that is done, your employees and yourselves will roll into kind of personal tax season. This personal tax season isn't much different than last year. There haven't been any real changes or significant changes in grants or deductions allowed. The biggest change we're going to see related to COVID-19 is the home office. So what was traditionally called the T2200 that you'd require from your employer, statement of employment expenses, which allowed you to deduct some home office expenses on a proration of the size of your office compared to your house and all those sorts of fixed costs related to your house. That continues, but what CRA has done is they've recognized, the federal government has recognized that a lot of people did stay home this year. So they've created a streamlined program that essentially is you tick the box if you qualify for having to work from home, and you're going to get an automatic credit. And that's it. You don't have to supply any other information to CRA or when you file your taxes. They of course have the right to audit it, and they may question you on it, but they try to streamline the process. Of course, the audit, I call it the automatic home office, is a small credit compared to, there's no limit on the normal T2200. So you're going to have to assess how many expenses, and if you're the employer, or if you are the employer, if you're going to issue T2200s to your employees, they'll have to decide what's better. The time it takes to collect all the data and make the normal T2200 and the subsequent Schedule 777 expenses, or simply just click off the box on home office credits and see what works. The home office credit is quite small. In the end, it's $600 credited, so it's not significant at 15%. So if you actually were in a home office prior to COVID-19, you most likely would probably continue on the T2200 using the Schedule 777 to write off the expenses. That's really kind of the biggest thing I want to discuss today, because as the employer, you're going to have to start issuing all these T2200s to your employees, and they're time consuming. They have to have signatures. They need to be accurate. You're responsible for the accuracy of the T2200s. And if you haven't done them before, you're going to need to assess whether it makes sense to go down the T2200 route or just the simplified home office for the employees, and inform them of that decision so that they can file their taxes accordingly. I'm going to open up that for discussion right now. Okay, there's no discussions on that. It's a short and sweet coffee chat. I just wanted to highlight some of those programs because we've had a lot of questions around that. We'll continue with our coffee chats next month, updating more, focusing on personal taxes and how that's been affected by COVID-19 or the subsequent grants. Of course, a big discussion going on right now is who took the CERB or the CRB, and we've certainly started to see some taxpayers come in with double payments. What do they do? The federal government's announcement that they're not going to make people repay it. They'll have to pay the taxes on it, and see if that changes in the budget. We're hoping to have a budget come out soon, and that will affect those sorts of things. Anyways, have a great week. Have a great end of February. Stay safe out there and enjoy the warm weather. Take care.